Hi trader, welcome to the weekly Forex video, taking a look at the euro-dollar bearish continuation in my view. This is a video brought to you by Admiral Markets and my name is Chris. First of all though, be aware that this video is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence and contact the appropriate entity to find out if it is suitable for you. Also please note that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This video is for informational and educational purposes only. By continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. Kick off with the euro-dollar 1 hour chart, and you can see that I have a fib from the top to the bottom. So you can see that I have a bearish fib and I'm looking for price to stop at this potential resistance spots. So from this top to this bottom. So from my point of view, there is a potential bearish continuation possible on the euro dollar, despite what of course is definitely a strong uptrend on the daily chart. There's no doubt about that. And if I look at this daily chart and other time frames, then I think that there's a good chance of an uptrend continuation. Specifically, if you look at the monthly candle itself, I think that looking at that candle close near the high of July with a pretty sizable July candle, I think that price could only go, for instance, perhaps to the 38 or 50 fib, which could be bouncing spots for the euro dollar to the upside. The 38.2 fib is at 116.40, the 50 fib is at 115.75. Those could be support levels for continuation up to the minus 272 target at 119.80/120, of course, which is a round level. So despite the fact that I see bearishness on the hourly chart, I do think that the target is nearby and that could be a bouncing spot for further upside, something like this, for instance. Alright, that is, I think, possible this week, perhaps next week. Let's take a look at some other time frames like the daily chart. You can see here that there are 7 days that haven't broken this particular high. To me, that's a time pattern that indicates that this particular push to the upside is probably over, and I would actually move this fib from here, from this bottom to this top, and you can see the price stopped at 23.6 fib. Bouncing spot could be the next bouncing spot, in fact, the next fib, the 38.2 fib at around 116.08. So from this point of view, I think this is a classical kind of hook back for one more correction, making an A, B, C for those that like wave analysis, and then after the C is completed, the uptrend can continue again. You can see that a bit better on the 4 hour chart. The 4 hour chart has divergence between these tops. When divergence is present on the 4 hour chart, the main target is the long-term moving average, which has not been reached as yet, which means that the target is still open. And I think that considering the other factors I just mentioned, plus one more factor, the 5 wave that has been completed here, like this, you see a clear 1, 2, 3, 4, 5. Within wave 5, there is another 1, 2, 3, 4, 5 internal within red 5, and this looks like a classical ABC correction. All right, so sorry for all those waves, but that is one of the reasons, that I'm looking for bearish continuation. This is, I think, the start of wave C. So when looking at this hourly chart, I think that you can see engulfing twins earlier today. That was a good bearish signal potential there for the euro dollar downside, and price is trying to break through the weekly pivot point as we speak. So I think if one didn't take this bearish candle on the 4 hour chart, or the engulfing twin on the 1 hour chart, then things to keep an eye on. All right, if it's bearish, that could be a signal for tomorrow. It could be a good daily candle break below the weekly pivot point like this. I think in any case on the hourly chart, keeping a fib from here to here, for instance, and looking for retracement to the 38. Now it's getting a bit confusing. I have too many fibs on, so let me remove one of these fibs quickly, which is this one, and even this one. Good. So and looking for a bit of a bear flag, right? If during the Asian session on Tuesday, the euro dollar makes a bear flag, I think that shows that there's momentum to the downside, that price is not showing any momentum to the upside as it makes a flag, which is a corrective pattern. And as it breaks that flag, I think there could be a good continuation down to the S1 at 117.27, and even further than that. If price really starts to break this formation, then price will start to break through this trend line. It will break through this trend line, which it already actually has done, but it will break through that trend line, and price could even go further. Of course, there's more space down to 117, and then even down to 116.25, as we know from the higher time frames, and even 115.50 perhaps. We will take a look at the pound dollar and dollar yen in just a second, but I wanted to keep you aware of the webinars that are coming up. We'll take a look at the euro dollar again tomorrow, of course, and Wednesday with Nenet, and Thursday we take a look at some educational topic where we're looking at Fibonacci levels. So a lot of live trading sessions and webinars coming up, one on Monday, one on Tuesday, and 2 on Wednesday. Price respected the Admiral Keltner bands, basically the resistance of it, showing some weakness here. It tried to break a bit through it, as you can see, but ultimately didn't break through the confluence of the long-term moving average, the trend line, the weekly pivot point, and the Keltner, which is basically 2 of these indicators are part of the MetaTrader 4 Supreme Edition, which you can find on admiralmarkets.com. And it's a special software package with 60 plus extra features, so definitely check it out. So I think that the dollar yen could be ready for one more downside now. Looking at this formation, looks like a sturdy pullback, and I think that price might be ready for a continuation. But it could also turn into a bigger pattern. So we've got to be careful when price retests 109. If it bounces there, what could happen is that price makes a triangle. It falls, bounces, falls, and before you know it, price is in this kind of formation. So I think that the short earlier today made sense, somewhere up in here at 109.60, and now I'm not so sure. I think that here too probably a bear flag would be pleasant. If price does fall and then makes a bear flag, that would be interesting. I just want to be careful that I'm not shorting as the dollar yen makes a triangle. That's the only thing. But if I see a bear flag, that would make sense. Other setup that made sense was up in here. The pound dollar is going sideways, is flat. So there are 2 options. Price could break the bottom of that at 129.50, and there could be a fall down to 129, the minus 272 target. That's not much space. The other opportunity, or potential I should say, is that it bounces here and then retests higher fibs. In that case, I would redraw the fib from here, from the very top, in fact. Yes, that is the very top, to the very bottom, which is right there. And I would be expecting price to stop at the 38.50 or 61.8 fib for a turn like this. So either it's going to complete one more push down and then make an ABC up, or it is going to make a C push up towards these fibs. So I'm keeping an eye basically on the weekly pivot point, on this particular 38.2 fib. If these levels get broken, then I think there could be an expanded correction to the upside. If price, however, breaks through the S1 and the support, I would expect a continuation to the downside. This space down in here is only 50 pips. So it's only really interesting for a small intraday trade on a lower time frame. That is tricky trading. You got to know what to do at the right time, all right? Because there's not a lot of space. More interesting, I think, is the potential if price gets higher. So I'll move the bigger fib again, like this. And more interesting, I think, is if price gets up to 131. I think a bearish candlestick pattern in that particular area is more interesting for a larger move down. There's also on a 4-hour chart a potential head and shoulders right here. This is the left shoulder. This is the right shoulder around 131. This is the head, right there. So that could happen, and you can see this head and shoulders pattern play out. So that 131, I think, is a strong level for a continuation lower. Download the MetaTrader 4 Supreme Edition at admiralmarkets.com. Of course, you'll find webinars, analytics, and articles there too. Wish you all great trading and talk to you soon. Cheers.